Now, we've seen a panic in the global equity market after Fed changed their policy stance, let's say in December and early Jan. But US bond markets have been very mature. The 10-year paper is still not gone north of 2 or 3 or 3.5%, which this kind of an inflation. Why is that, sir?
Because, in America, the American interest rate is supposed to become 1.25%. What is a 1.25%? Right? So I don't think, the stock market has gone up in every rate increase cycle.
Yes.
So I think what I'd say is I cannot predict exactly what will happen in inflation, but what I feel is market is prepared for inflation.
One of your favorite quotes is that interest rates, they act like gravity. Now we can debate whether it's going to be 3 hikes or 4 hikes, but globally and locally also we will come out of a patch of unusual low interest rates. That is over for sure. When will the law of gravity of higher interest rates start affecting asset classes?
Well, see, when there are boom periods and I don't know about America, but India, the space it is in, I don't think any increase of interest rates of 100, 200 basis point is going to affect corporate investment, or where it could affect is in consumption of houses. Because you can't have the 10-year at 6.8 and a home loan at 6.5. I don't think any other sector is going to be so badly affected.
At the start of the year, there were 2 events which everybody wanted to look forward to. One was the Fed and second was budget. Both the event risks are behind us. What is the next big thing for rest of the year market should look forward to?
I think the end of COVID. I think that's the most important thing. And continuation of the disinvestment of the government.
From a market standpoint, is COVID and COVID adjustment is history now? Have markets moved on?
No, that nobody can predict. See, we have only a 2-3 month period where we don't see any new variants and this becomes like a common cold. Then I think we'll move ahead. But more and more the attitude of government is to allow normal activity. Or who suffers, it's a small, it's like a cold, any other cold, only thing it is very, very infective.
I asked you this question last Feb. I'll go back to that question again. It was a question based on the Mumbai train journey from Churchgate to Kandivali. If the bull market starts at Churchgate, goes to Kandivali. Last March you told me the bull market has reached only Churni Road. Has the bull market reached further?
Maybe from the start of the Churni Road station to its end.
Okay, so still a long way to go. Would you be surprised that in this bull market, Nifty goes below 15,000?
Well, anything can happen, and the Nifty goes to 15,000. That's not the reversal of the bull market, but I think it's highly unlikely.
The selling what we've seen, it's not a selling, it's a meltdown in global technology stocks. Was that overdue? Is that over?
It was not a meltdown in global technology stocks.
Internet stocks.
It was a meltdown in bullshit valued stocks. And all the SPACs and the dreams, where he was not selling earnings, but he was selling dreams. And I think it's a very healthy correction.
Has realization dawned on investors that ultimately it's about buying companies with cash flows and don't buy dreams but buy reality?
Why we have to teach them whether they dawn or not? See, it is history. If there is one truth in history, that ultimately earnings are slaves of cash flow, valuations. So anybody may come in for a temporary period, but it's not going to make a difference.
Everybody is talking about the risk which is associated if there is a crypto meltdown. Could that impact other asset classes in a risk-off environment?
Yeah, it could, but see, there the class of investors investing in equity and crypto are totally different. And once I think crypto will collapse one day. Where will they invest then?